to our new session. In our previous session, we dove into technological innovations in microfinance and saw how advancements like mobile banking, blockchain technology, AI and digital wallets are reshaping the sector. These technologies have opened doors to greater financial inclusion, efficiency and transparency, especially in remote and underserved regions. We also discussed how these tools are expanding access to essential financial services, improving credit assessments, and supporting financial literacy. Through these innovations, microfinance is becoming a more powerful tool to empower individuals and communities worldwide. Today, we are shifting gears to focus on product innovations in microfinance. We will explore new financial products like micro-insurance, micro-pensions, and micro-leasing, each designed to meet the unique needs of low-income individuals. These products go beyond traditional microloans to help people secure their futures and improve their livelihoods in meaningful ways. Let's dive in and discover how these innovative financial solutions are helping to create stability and opportunities for those who need them the most. As we have seen, microfinance has undergone substantial product innovations to cater to the unique needs of low-income populations who lack access to traditional banking services. These innovations have extended the reach of financial services by creating offerings that consider the economic constraints and social realities of underserved communities. In this video, we will explore the key product innovations in microfinance, including micro-insurance, micro-pensions, group lending models, micro-leasing, sector-specific microcredit, housing microfinance, and Islamic microfinance. So, let's start with micro-insurance, a financial safety net. Micro-insurance provides affordable insurance products to low-income individuals who are often excluded from traditional insurance markets. This helps protect these individuals against specific risks such as illness, death, natural disaster, and crop failure. For low-income populations, unexpected events like a health crisis or crop loss can lead to catastrophic financial consequences. Microinsurance helps mitigate this risk by providing a financial safety net that can prevent borrowers from spiraling into poverty. Microinsurance comes in various forms, each targeting different needs, like health microinsurance. This covers medical expenses and healthcare services, reducing the financial burden of unexpected illness. In countries with inadequate public health care, health microinsurance is vital for providing access to quality care. Next, crop and livestock microinsurance, targeted at farmers and rural communities. These products offer protection against weather-related risks or disease outbreaks affecting crops and even livestock. This is particularly important in countries like India, where agriculture plays a crucial role in the economy. Next, life and disability microinsurance. These products provide financial support to families in the event of death or permanent disability of the primary breadwinner, helping to safeguard the family's economic stability. Now let's look into challenges and implementations of microinsurance. While microinsurance has great potential, it faces challenges too. Many low-income individuals lack awareness or understanding of insurance products, and in rural or marginalized communities, people may not trust insurance providers due to limited prior experience. Additionally, low premiums can make it challenging for microinsurance providers to remain profitable without scaling significantly. However, challenges remain. Low awareness and trust issues, especially in rural areas, can be barriers to widespread adoption. Successful initiatives like Kenya's Kilimo Salama project, which offers crop insurance to farmers via mobile technology, show that innovative delivery methods can help bridge this gap. Kilimo Salama's success highlights a growing trend using technology to make microinsurance more accessible and responsive. Looking ahead, microinsurance is likely to integrate more advanced technology such as parametric insurance, with automates payouts based on predefined triggers such as rainfall levels. By leveraging weather data and satellite imagery, parametric insurance offers quicker and more efficient claims processes. Next, let's look into micro pensions, securing retirement for the informal workforce. While microinsurance provides immediate risk coverage, this micro pensions focus on long-term security, especially for workers in the informal sector who lack access to traditional pensions. Traditional pension schemes require steady contributions and complex documentation, making them inaccessible to those with irregular or low incomes. Micro pensions, in contrast, offer flexibility, allowing users to contribute small amounts whenever they have surplus income. This approach is especially critical in many developing countries. Pension systems are either underdeveloped or cater exclusively to the formal sector. Informal workers, who make up a large portion of the workforce, are at risk of poverty in old age due to lack of savings. Micropensions provide a mechanism for these individuals to gradually save over time, offering financial security to their later years. Operational models and flexibility. Micro-pension schemes often feature flexible contribution plans. For example, India's Atal Pension Yojana allows informal workers to contribute to a pension plan with varying amounts depending on their financial situation. Contributions can be adjusted according to income cycles, such as after harvest for farmers, ensuring participants can continue saving during lean times. as we look into the future of micro pensions, the future of micro pensions will involve enhanced financial education and technology driven platforms. With the increased use of digital technology like mobile apps, micro pension providers can educate participants on the benefits of long term savings and help them track their contributions to real time. Now let's move from individual to collective financial solutions. Group lending models, social collateral and peer support. Group lending models rely on social collateral where groups of borrowers, typically women, take collective responsibility for each other's loans. This model fosters peer support and accountability, helping to ensure that loans are repaid on time. Now let's look into the role of social collateral. The concept of social collateral has proven effective in ensuring high repayment rates. Since borrowers know each other and live in the same communities, peer pressure to repay is significant. Group lending also fosters community development as members support one another and share knowledge about business practices. Group lending is also been impactful in empowering women. Women often face greater barriers to access credit compared to men. These group lending models, such as those pioneered by the Grameen Bank in Bangladesh, have helped women start businesses, improve their households, and invest in their children's education. However, like micro pensions, group lending has its own challenges. Social pressure, while often positive, can sometimes create tension if a member cannot repay. Striking the right balance is the key to maintaining trust and community support. Now, let's delve with micro leasing. Affordable access to productive assets. Micro leasing allows individuals and small businesses to lease equipment or machinery instead of purchasing it outright. This innovation is especially valuable in sectors like agriculture, where access to expensive equipment can significantly improve productivity but is often out of reach for low-income farmers. Micro-leasing, entrepreneurs can acquire essential assets without large upfront investments. Instead, they lease the equipment for a set period with the option to own it at the end of the lease term. This allows them to use their limited capital for other expenses while improving their capacity to generate income. Now let's look into challenges of microleasing. One challenge of microleasing is the risk of equipment breakdown or becoming obsolete during the lease period. This can be addressed through maintenance agreements or insurance products bundled with the lease. Future directions of microleasing, and as we look into the future, new technologies like IoT devices could help monitor leased equipment, ensuring it remains in good condition and is used effectively. This would allow microfinance institutions to track their assets more efficiently and ensure that equipment is maintained properly. Continuing with our theme of customized support, now let's look into sector-specific microcredit, tailoring financial solutions to industry needs sector. Sector-specific microcredit involves creating tailored loans products designed to meet the unique needs of specific industries or the communities. By tailoring loan terms to fit cash flow patterns and risks, microfinance institutions can better serve diverse sectors like agriculture, trade, and artisans production. For example, agricultural microcredit. Loans for farmers may feature flexible repayment schedules that align with crop cycles, allowing payments after harvests. These loans might also be used for purchasing seeds, fertilizers, or irrigation systems. Next, trade and commerce microcredit. Loans for traders and shopkeepers might include working capital loans to manage inventory and cover operational expenses. These loans often have short-term repayment schedules that match sales cycles. Next, artisans and craft microcredit. Loans for artisans and small manufacturers help them purchase raw materials or invest in production equipment with repayment terms designed to align with their production and sales periods. This targeted approach shows how customization within microfinance products can help underserved communities thrive within their industries. Now let's look into housing microfinance, building better living conditions. Product innovations in microfinance extend beyond businesses to impact personal and community well-being. Housing microfinance provides low-income families with financing for home improvements, repairs, or even construction. With incremental loans, these families can gradually upgrade their living conditions, enhancing overall quality of life. Now let's look into some of the examples of housing microfinance products. Home improvement loans. These loans are used for repairs and upgrades, such as improving roofing or installing sanitation facilities. Construction loans. These loans are designed for building new homes or expanding existing ones with phased disbursements to match construction milestones. Micro mortgages. Small short-term mortgages that provide financing for purchasing land or building materials tailored to the income levels and repayment capacities of low-income borrowers. Now let's look into some of the challenges. Implementing housing microfinance can be challenging due to the need for accurate property valuations and the legal documentations. In areas with informal land tenure systems, this process becomes more complex. However, partnerships with local partners and technical assistance can help address these challenges. Now let's delve with Islamic microfinance. Inclusive finance for Muslim communities. Islamic microfinance offers financial products that comply with Sharia law, which prohibits interests, riba, and emphasizes ethical investments and risks sharing. This product innovation addresses the needs of Muslim communities who require financial services that align with their religious beliefs. Islamic microfinance products include Murabaha, a cost plus financing arrangement where the MFI purchases an asset and sells it to the borrower at a profit margin, avoiding interest. Ijara, a leasing agreement where the MFI leases an asset to the borrower for a fixed period of time with the option to purchase the asset at the end of the lease term. Mudaraba, a profit sharing partnership where the MFI provides capital for a business venture and profits are shared according to a pre-agreement ratio, with losses borne by the provider of the capital. Through these options, Islamic microfinance provides a culturally respectful way for Muslim communities to access essential financial services. In conclusion, product innovations in microfinance have transformed the financial landscape for low-income individuals and communities, addressing their diverse needs and challenges. From microinsurance and micropensions to group lending models, micro-leasing, sector-specific microcredit, housing microfinances, and Islamic microfinance, these innovations have expanded access to financial services and promoted economic development. Microinsurance provides protection against financial risks, micropensions offer retirement security, and group lending empowers communities. Micro-leasing enables asset acquisition, sector-specific microcredit tailors solutions to different industries, whereas housing microfinance improves living conditions, and finally, Islamic microfinance provides ethical Shahira compliance products as the microfinance sector continues to evolve. These products innovations will play a critical role in promoting financial inclusion, economic stability, and sustainable development. By addressing the unique needs of underserved populations, microfinance will continue to make a positive impact on the lives of millions around the world.